Welcome to the Significance of Wealth podcast, where we explore the evolving landscape of wealth management, private investments, and collecting as both a passion and investment strategy. I'm Marty Salt, and our guest today is Ajay Gupta. Ajay holds the Certified Investment Management Analyst, Chartered Retirement Planning Counselor, and Certified Private Wealth Advisor designations. He built Gupta Wealth Management before the firm joined Creative Planning, and his board work includes CAZ Investments, the Tony Robbins Foundation, the Chopra Foundation, and DigiPower X. Today, Ajay and his longtime friend and business partner, Tony Robbins, invest together through a family office focused on their own capital. Tom and Ajay discuss how Ajay thinks about private investments from an owner's seat, including why he chose to take an ownership stake in a private investment platform instead of only investing in its funds. They also talk about what he's watching in real estate and energy, why humanoid robotics has his attention, and a new longevity venture with hospitality entrepreneur Sam Nazarian. And now, here's your host, Tom Ruggie.
Hello, everybody, and welcome to another edition of the Significance of Wealth podcast. Today, I have with me Ajay Gupta. Ajay is somebody I met several years ago, was actually introduced to me through a marketing group that I was doing some work with. I did a little bit of research on Ajay, and the first thing I found out was he was a member of Tiger 21, which I am also a member of, so had a great commonality there. But then, what catches a lot of people's attention is his relationship with Tony Robbins, which we'll talk about a little bit. But as I was preparing for this podcast, it just brought back the vision of me. I started in the business in 1991, Ajay, and I had the Personal Power cassette tape series, and it was a box like this big. I think it had, I don't know, 12 or 16 cassettes in it. And I remember being in my little beat up car that I was driving back and forth to meet people with. And I always had it in the back seat, and I'd pull it up and put, cassette tape 3 in and listen to that. And I mean, that was a staple in my life for many years. So it was just funny to prepare for this and have that recollection. But anyways, Ajay, thanks for being here. I appreciate you joining us. And,
Happy to be here, Tom.
Yeah, thank you. So what we're going to discuss a little bit about today, I want to discuss, Ajay's career. And I actually really want to start from childhood on. He's got an amazing story. We're going to talk a little bit about family offices. We're going to talk a little bit about private and direct investments, and then kind of, what does the next chapter for Ajay look like? So Ajay, if it's okay with you, let's talk about you a little bit. Start off with your childhood and how you were raised, and we'll kind of go from there.
Okay, Tom, so I guess to literally start from the early days. I was born in Montreal, Canada. So that's where I was born. My mother and father were both born in India. And so I was born, we lost our mom when I was 6 years old. So we had to really find ways to work hard. And I knew that there was no plan B to fall upon. But, elementary, high school, I had more fun. It was more about my friends, and I didn't take academics that seriously. But when I went to university, that's when I started taking things extremely seriously and ran for president of the school that I was part of, the largest English business school in Canada. And just got very interested in the wealth management space. So started my career in the wealth management space in Montreal, Canada, believe it or not. But within a couple of years, I fell in love with San Diego. So I decided to relocate to San Diego and restart my wealth management career over there. I remember telling my director in Montreal, I go, I'm going to go to San Diego and continue building my wealth management business. And he said, I haven't thought about this in a while. He said to me, are you crazy? You've lived here. You built so much goodwill. And this industry is all about relationships. And you built decades of goodwill. Now you're going to go somewhere where you don't know anyone. First of all, number one is you can't take any clients cross border. You'd have to restart. So it's not like I could bring my clients and get referrals. That was one thing that he said to me. And then the second thing he said to me, he goes, if you go to San Diego, Ajay, you're going to look more like the landscaper than their wealth manager. I guess you could say that, 30 years ago. And I was like, wow, okay. By the way, this director was amazing. He was tough on me, but I learned a lot of absolute nuggets with him. But I did make the move to San Diego and restarted my wealth management career at the age of 29.
Okay, so that was actually my follow-up question. So you got into the business what year, and then when did you decide to move to San Diego?
Beginning of 1996 is when I started. a 95, 96 era after I graduated. And I moved to San Diego in 2000.
Okay. Yeah, that's a big adjustment. Definitely starting over from literal scratch, right? You
Literally.
didn't have anything. You didn't have any foundation.
I didn't know anyone there really, but you know what was really nice? My clients from Canada, they started introducing me. AJ, I've got a friend in Orange County. I've got a cousin here. So it gave me a little bit of a base, but it was literally, it was in hindsight, it was a bold move, but one of the best decisions of my life.
Yeah. And it tells you the power of relationships to have such great relationships with your clients in Canada that, where there's an opportunity, they're willing to make recommendations for you.
Well, I tell my children that the most important thing on my net worth statement is my network of relationships that I've had and fostered over multiple decades. Sometimes we're seeing, you know, the fruits of those relationships coming today, but they've been relationships that we nurtured 10, 15, 20 years ago. And we're doing things today that probably good things will happen next 5, 10, 15, 20 years. We're not counting. We just know that, you just put your head down and add as much value to anyone and everyone and whatever you're doing, and eventually good things happen.
Yeah. Fantastic advice. So then you built a nice practice in San Diego. I know you got it to over $1 billion. And at some point you decided to sell the business. So what was kind of take
So,
us through that process a little bit?
yeah, so actually, Tony took me for a journey of a lifetime, to say the least. When he was writing the book Money Master the Game, which is like almost 14 years ago, and it's still New York Times number one personal finance book of the century. He took me for a journey of a lifetime because he wanted to go out and interview the most powerful people in finance. Ray Dalio, founder of the largest hedge fund in the world, Charles Schwab, Carl Icahn, the list goes on. And the journey for me was I had front row seats to those interviews. And if I wasn't at the interviews, I got the recordings. And when I started speaking at Tony's events, I literally started saying that was a journey of a lifetime. And I learned more in those 150 hours of interviews than I did 25 years in the business. Like the nuggets that I got from these titans. And so when I started mentioning that from stage, and then he also dedicated a specific chapter of broker to fiduciary, the inbound calls started coming in. And I realized that, you know what? We're nice sized firm in San Diego with clients around the country, but really mostly focused in California. I needed to either hire a lot of people very quickly to take the inbound calls. But then I spoke with one of my friends who I'd already been sending referrals to just because I couldn't handle the inbound. And we decided, let's lock arms. I didn't buy a piece of his firm. He didn't buy a piece of my firm. We just locked arms. And he had infrastructure and wealth managers all over the country. So we merged our practices together and we just built a substantially larger firm over the next 5 years. And then ultimately, as we're on track to be, approaching $100 billion of assets under management, a very large private equity firm gave us a multi-billion-dollar valuation. And at that point, I said, you know what? I've done this for 25 years. I'm selling 100% of my stake. And they asked me if I wanted a second bite of the apple. I said, nope, I know my personality. I have a very addictive personality. I'm out 100%. So now I don't have any clients in the wealth management space, but I have lots of friends that like to every once in a while pick my brain, and I still love sharing what I would do if I was them.
Yeah. And count me as one of those. So you either want the entire apple or none of the apples is what you're telling me.
All or none, exactly. But
Yes.
the
Yeah.
best part about it is it was a hard decision to make because I was so addicted to the relationships, clients that knew me before I was married, and now they saw when I got married, then you had teenagers, and so it was just those relationships are still there. I still get the number of former clients that sent me Happy Father's Day messages yesterday. It's just nice to be still connected with so many of them.
It's awesome. So you brought up Tony. So, you have an amazing relationship, obviously, of Tony. You said is your best friend. How did that start? How did that come to fruition?
So I was a fan of his work. So one of my friends when I was in my early 20s was in residency. He's studying to be a doctor, and he had these cassettes. And I listened to him. I listened to him listening to one of the cassettes at one point, and I thought, wow, there's some good knowledge in those cassettes. So I borrowed his cassettes because back then I couldn't afford to buy my own cassettes, and I listened to them over the course of like 2, 3 days, just absolute immersion. And I learned so much from those, and I did not realize it, that I was reshaping the way I thought. And what a great time to be, getting a gift like that of Tony's teachings when you're in your early 20s. So then I became a fan of his work. When I was moving to the United States, I remember making a list of people that I wanted to have relationships with. Number one was Tony, but it was an extensive list, included world-renowned author Deepak Chopra, Larry King was big then, Mike Tyson. I had a very eclectic list basically of people,
Hmm.
and I just said I'd love to have a relationship with these people if I'm living in the United States. And believe it or not, the majority of those people are friends of mine now, former clients or partners. So it's just the journey was fascinating. Deepak Chopra's the gentleman that my dear friend introduced me to the Robbins family almost 20 years ago. Actual introduced us, and it's just been an amazing partnership with Tony as well.
That's fantastic. So tell me a little bit about what prompted you to decide to get out of the business. You said I either have to be fully immersed or not immersed at all. It must have been a lot of thought process that led up to that, though.
Yeah, I was 49 years old. I realized that the last 20, 25 years of, working 24/7, all of a sudden there was generational wealth that had been, there for my family and generations to come. And I thought, let me change it, because for 25 years, that's all I did. If you tried to distract me to do something else, I wasn't buying it. I just wanted to focus on my clients, my business, the practice, the team. And so I thought, you know what? What is the next 25 years going to look? Because you could always keep growing, but I thought, let me change it up. I didn't know exactly what it was going to be. And I knew that I wanted to explore. So I remember calling Tony. I said, Tony, this is amazing. We got this valuation and I'm retiring. And I just remember he paused, then he chuckled. And then he said, young man, you're not retiring, you're rewiring. And I didn't know exactly what that meant that day, but he did say, AJ, we invest together. You've been advising all my personal wealth for many years. Why don't we start our own family office and just invest together as partners? I don't pay him a fee. He doesn't pay me a fee. We just invest together. So I retired for approximately 3.5 hours and we launched the robinsgupta.com, which is Robbins Gupta Holdings, our family office. And we just invest together. Through his reach, we have pretty much access to anything and everything that we want to have access to. And so I always joke with him. I go, Tony, you do things that I can't, and I do things that you shouldn't. And when you have this brotherly love and connection and relationship, we can do a lot of great things together.
So for the investments that you're doing within Robbins Gupta, what's the process there? What's the vetting process? I mean, obviously, like you said, you've got access to probably virtually anything out there, but there's a lot out there. I mean, so how do you decipher what makes the most sense? What are the hot areas? Are you looking more for short-term gains? Or are you looking much bigger picture, 5, 10+ years down the road, combination?
Yeah. So we're very thematic investors, and I'll give you an example. So on the liquid side, we're mostly index funds. Index funds, low cost. We'll rebalance. We'll do the tax loss harvesting, and we do own individual equities, but a large portion is passive index funds. Number one. On the private side, we want to be very careful, because in the alternative investment space, as you know, there's some good stuff and a lot of bad stuff out there. So one of Tony's longtime closest friends, Paul Tudor Jones, his former partner, introduced us to CAZ Investments, CAZ Investments, which you and I've talked about. And in my first conversation with them, and I get, as do you, I get investment decks every single day. Every single day, I get investment decks, and I could look at some of them. I can't look at all of them. But in my first conversation with CAZ, the first thing that they offered me was, they said, are you familiar with private credit? And I said, yes. Are you familiar with Monroe Capital? I go, very familiar. I know Ted Koenig's work and their unbelievable firm, and we've already been investing with them. And I stopped him and I said, thank you so much for your time this afternoon. I already have a direct relationship, but if you come up with any other investment opportunities, put me on your distribution list. So I thought I saved like 57 minutes of a meeting, basically, because I thought, there was nothing more to talk about. And then they said, no, do you want to own a piece of Monroe Capital?
Mm.
I was like, it kind of caught me off guard to go own a piece of Monroe Capital. And first thing I thought about is, are they in trouble? And then he explained to me, actually, no, they're not in trouble. They're looking to sell a minority stake of the firm so they can have excess liquidity, so they can add more funds to the, so they can put more of their own money into the next funds. And when they started walking me through the economics of the being on the receiving end of the contractually obligated management fees, and then on the receiving end of the 20% average, incentive fees,
Mhm.
and of a growing firm, they had me. They had me right away, and we invested. And then they started bringing other opportunities in that space. So ultimately, I went up to them and I said, I would love to own a piece of your firm. Clearly, we're going to be large investors in your funds, but I'd love to own a large piece of your firm and then introduce you to my relationships around the country or around the world. And long story short, they weren't really interested in selling at that point until they found out that I was partners with Tony. And the founder, brilliant gentleman, Christopher Allen Zook, which is where the initials come from, Cat Investments, he mentioned to me that outside of God and his high school sweetheart, no one has more influence in his life than Tony's teachings, and that CAS was founded by some of the principles of Tony's teachings. I was like, that was the beginning of a beautiful partnership. So the reason I want to ask how we're vetting private investments now is we're doing the majority of them through CAS's platform. It's, we help them grow to a $12 billion asset management firm. And because they own more than 100 private equity firms, the access that they get, and, we're talking big investment firms, HIG, TriBest, Vista Equity Partners, Silver Lake, Clear Lake, just, big names. The average assets under management is 30 billion. So the deal flow that we get to look at and invest alongside people that are writing giant checks, that's oftentimes where we do our direct investing or through some of the funds.
Yeah. Yeah. So, I mean, candidly, in my scenario, it's very similar. There's what I would call a trickle down effect because we have access to a lot of very large, well-known private equity firms that are
Right.
doing all of the vetting of other opportunities, direct investments, whatever it may be. And it kind of ultimately trickles down to us and makes that decision making process for us a little bit easier.
It's like Tony's last financial book, The Holy Grail of Investing. If you could find a private equity firm that's buying a company for 215 million, I'll just use that as an example, and they can only put 200 million in their fund, they have an extra 15 and they're ready to give it to us at minimal, if any, economics. Now you're the high quality vetting that's been done versus the country club deals, which we've all done. We all see the fancy
We've
deck,
all lost money.
and we put it on our spreadsheet and we just watch those investments. Not no proper reporting, late K1s. People get distracted and jump to the next exciting thing. So the fact that we're now investing alongside some of the
Yeah.
smartest people in the world, it's just a way of getting much higher quality access.
Yeah. Makes a huge difference. So, what else are you doing now? You've mentioned Robbins Gupta. I know you're on at least one, if not a couple of boards. I believe you're pretty heavy into some foundation, charitable type planning. So, what else is occupying your day? Because, I don't know you extremely well, but I know you well enough to know that you're not sitting there fishing every day and, hanging out, laying out in the sun and doing that sort of thing. So, you're working.
I joke, I don't retire well. I don't like golf. I can't even imagine spending 4 hours for myself. A, I'm not good at it and I don't like it. And B, even though I live here in beautiful Miami and there's beautiful beaches, do I look like a guy that needs a tan? So that's not my thing either. When I'm not spending time with my family, and I really love building things, and that's what's great with this partnership with Tony. So I sit on the board of CAS Investments, which has been just an absolute pleasure watching how this firm is growing and adding value to their clients, and also giving us access to unbelievable investment opportunities. I sit on some foundations. Deepak Chopra Foundation, Tony Robbins Foundation, and the Ajay Gupta Foundation. So we are very much involved in nonprofits and philanthropy. One of the really exciting areas that we're involved in, there's several. We have 29, almost 68 different businesses together, but one of them, which is really, T and I are really enjoying, is we partnered with the legendary Sam Nazarian. If you don't know Sam's work, is Sam started SLS hotels, and then he ran the Mondrian, the Delano, the Fontainebleau, and he built the world's largest luxury lifestyle hospitality brand in the world and sold it to a French public company just before COVID, believe it or not. So he sold it. And then then he was just looking at the next stage of his life, and and he's also looking because he creates things for himself. And so he was looking at longevity and luxury. And he approached us because he was so impressed with Tony's book called Life Force. And he approached us if we wanted to become partners. So now, we're going to have dozens of luxury hospitality. The name of the brand is called The Estate. We haven't announced all the locations yet, but when we do announce, we will be the largest in the world that's specializing in luxury, residential hospitality with a full comprehensive platform of longevity. We're not talking about yoga and milkshakes. We're talking about full body MRI scans, every type of blood work you could look at, and across the whole board, basically, and the lifestyle. So that's really exciting because we get to see cutting edge technology, and we get to be part of something that's important. Like our ideal client is you, me, and a lot of the people that we know that who would not want to extend their quality time remaining. I call it QTR. Who would not want to extend the QTR by another 5, 10 years? Just a lot of this technology is here. Just many people don't know about it. I used to brag 15 years ago when I had slept on 4 hours, thinking, "Oh my goodness, I'm such a hard worker. I slept only 4 hours." Complete opposite now. I get up in the morning, I look at my Aura
You're
ring.
taking time away from yourself doing that.
Exactly. I look at my Aura ring and I go, when I get up in the morning now, I'm looking at my sleep score. And I'm like,
Yeah.
getting excited when it comes in optimal. So things have changed dramatically. And maybe it's the stage of life that I'm at. But that partnership with Sam, Tony and I are really enjoying him. And he's the best in the world at what he does. And so that's going to be a really exciting journey for us going forward.
Well, KJ, I look really forward to hearing more about that. I would, as we've discussed personally, from a business standpoint, we have so much focus on what has been the late stage pre-IPO companies, many of which have gone public or are about to go public now. And yeah, I've really been thinking a lot over the past year about what is my pivot from this, monumental amount of time that we've spent on this. And number one on my list from a personal standpoint, but also from an investment standpoint, is longevity.
Yeah.
And I make the claim very often to anybody I'm talking to, but I think there's not only the possibility in reality that we could live to 100, 120 plus, but we're doing so with that quality of life that you're talking about. And at my age, I turn 58 next week. That's a big priority for me. I don't want to go backwards physically, mentally, anything like that. And I think there's the opportunity to, to gain access to at least contributing to that, making that happen.
It's such a, now that we're in that space and we're in that space in such a big way, one of our companies, Fountain Life, that's going to be kind of powering some of the diagnostics for the estate. But, when you have your health, you have a million goals. And when you don't have your health, you have just one goal.
One goal.
And
Yeah.
I just see the conversation. Well, I'm 55 now. So I do see more and more people talking about it. But it's, the conversations are happening with people in their 20s and 30s as well, too. So
Absolutely.
it's just, it's here. It's not going away. And it's total addressable market is like $9 trillion by 2033. So it's growing tremendously.
Yeah.
And you get
Yeah.
to impact people's lives. You get to impact people's lives. You add a couple quality years to their life remaining, and it's amazing. The people that I've told, go to Fountain Life, go get the scans. And I have several friends that have come back to me and have said, "You saved my life." They found early stage cancer. To find something years before the first symptom shows up, that's the time to find it. And you can nip it. And when you find something, when the first symptom shows up, it's just the probability of success isn't as high. So if you could be preventative and be forward thinking about that, I tell anyone and everyone that I care about, go do the advanced diagnostics. And if it's Fountain Life or somewhere else, but just do it.
Yeah. Well, it's funny you say that. I mean, literally just 2 weeks ago sent off a package to True Diagnostics to basically give me like a readout of everything that's so comprehensive. I'm going to have somebody, translate it for me. But one of the firms that an investment partner of mine and myself are looking at is Fountain Life for that. We've got 2 or 3 firms that we're looking at, but they're one of them. So
Yeah.
again, we're on the same page there.
Yeah. No, I'm just so impressed with them.
Yeah. You mentioned that you run the family office. Now, are you actually running a single family office, or is it where you're doing things comprehensively? And if so, what does that look like? Or is it really more an investment management company?
Yeah, it's basically the best way. You've heard the saying, you've seen one family office, you've seen one family office. So what we do is, we have a team of people that help us, kind of just manage all the different investments and all the different moving parts. But really, the best way for me to describe Robbins Gupta Holdings, it's we invest together. We're getting lots of investment opportunities. We have estate planning attorneys and accountants and CFAs and that whole infrastructure. But really, we're just looking to make sure that when we make an investment, it's usually long term. Like when we invest with CAS, as either owning a piece of CAS or the underlying funds, these are very long term investments. And on the equity side, as I mentioned, it's really on the passive side. So we're not making lots of moves every day. We'll be tax sensitive to make sure that we're being thoughtful about it. And even when we buy real estate, these are long term real estate holdings that if we did sell the real estate, most of the time we're going to do a 1031 exchange and go into other real estate to defer the taxes. So it's more like an investment arm. We don't have any outside clients. There's no investors. It's just our
Do that.
wealth
Yeah, it's single family.
together. So
Well,
we just,
single, and maybe a dual family.
yeah, exactly. Dual family office is probably the best way to
Yeah, yeah.
describe it.
Well, let's talk a little bit about the alternative market. So, kind of what's your broad opinion on what's going on today?
It's just it's growing. Alternative investment asset place grew by like $1 trillion over the last 10 years, and it's expected to grow by another trillion over the next 5 years. So thematically, that's a place where you want to be, which is why we kind of took an ownership piece in CAS, because we wanted to own the asset management firms that are managing alternative investments, but also helping people think through liquidity versus illiquidity. And a lot of people got to get their arms around that, because I like alternative investments for a couple of reasons. Number one, they're not correlated to other parts of my portfolio. And the ones that I'm looking for are going to reward me for being less liquid. And so when I speak at Tony's events and I teach, liquid versus illiquid, the best example that I use, and it's an extreme example to drive home the point, is if someone came to me and said they've got $25,000 net worth investable and they want to invest it, how much should be illiquid? I'd say zero. Keep it all liquid and start building that foundation. And then to drive home the point, something very extreme. If someone came to me with $100 billion and said, AJ, how much should I be illiquid? I could build a case that 99% could be illiquid, because he still has 1 billion for a rainy day or having
Right.
access to it. Now, obviously, that's an extreme example to drive home the point that as your net worth gets larger, then you have the wherewithal to have more illiquid investments, as long as you're getting the illiquidity premium, getting rewarded for going less liquid.
Mhm. What do you think is the most misunderstood thing about private equity and alternative investing? With all the conversations you've had with people.
It's been interesting. Oftentimes people are presented this deck. And have you ever seen a deck where they're pitching a concept or investment where it says, most likely you can lose 100% of your money? I've never seen that.
AJ, I always use the phrase, I don't think I've ever seen a bad, non-optimistic deck in my
Yeah,
career.
there you go. There you go. So I think what a lot of people don't realize is, as good as the concept looks, you just have to be very thoughtful. And managers, or where you're getting the investment idea from, really matters. The difference between good managers and bad managers or average managers is dramatic. So you need to know where you're sourcing the deal. You need to know who the entrepreneur is. You want to see people eating their own cooking. I love it when presented something and the founder has invested substantial amount of their own capital into the business. So they're eating their own cooking. And you really have to remember that sometimes these investments can be very long, 5, 7, 10 years, easily, at least in the venture capital space. So I think, and then I've seen people understand it, but then after 5 years, they want to get out. And some people hate the late tax reporting, and they're getting all their K1s, days before the actual tax returns are due after an extension. So I think those are things you just need to really take into consideration.
Yeah, for sure. And I don't think you can overemphasize the eating your own cooking comment. I mean, for what it's worth, there is not a single private or alternative investment that I've offered to our database that the first hurdle to offering it is not would I invest in it, but am I going to invest in it? And as you know, I invested in CAS, but it wasn't until I invested in CAS that became an option that I would roll out to our database. And so that's the way That to me, that's the only way to roll.
I agree 100%. And it shows alignment. And I don't mind, I don't mind being the guinea pig, if I'm advising, when
Yeah,
I used to advise people, go first and try the new technology or make the new investment. But, once you believe in something and you see the people behind it, then I don't mind sharing with everybody, exactly what
yeah,
we're doing.
absolutely. Is there any, I mean, I don't want you to make predictions here, but is there one or two areas that you're watching sector wise more closely than anything else? Really on a more shorter term horizon over the next couple of years, maybe?
So we always talk thematically like longevity and luxury and alternative investments. But one of the things that we're making practical things that we're looking at right now is we like to go where capital is scarce. Right now everybody's talking about AI, and again, we have our positions in AI, and we're very comfortable with them, and they've done really well already. But we're looking at one of the asset classes that people have not had a good experience the last couple of years and are not happy about it and not jumping in with all their cash is real estate. The largest asset class in the world. And I don't see too many people saying, oh my goodness, I gotta buy more real estate right now. So we're looking at that. The asset class has struggled last several years, and we're starting to see opportunities. So, we own some platforms like Realm, and they find opportunities all over the country. It doesn't matter where it is, they're just looking. Last year they started buying office space in San Francisco, you know, and the real estate market over there at
You're
the
getting that
bottom.
cheap, cheaper.
Yeah,
Yeah.
very, very cheap. And so no matter what you think about different parts of the country, usually you want to go where capital is scarce. So we're not going to time it right. We'll never get everything out of the top and get in at the bottom with everything, but there's a lot of profits to be made in the middle. And if you just
Yeah.
kind of rebalance your portfolio and look where the areas that have struggled last couple of years, today it's real estate. And we're going to do it slowly. We don't know what the bottom is going to be or if it's already happened, but that's where we're adding some allocation right now.
Well, again, it's funny where you say that because I've got some alignment with you there, not quite 100%. We are not actively looking at real estate right now, but I do have a thesis that, the AI market is going to be very similar to, what happened during the internet, the internet outleash and then ultimately the internet bubble. And I think we will have an AI bubble as well. And what I believe will happen is if we in fact have that bubble and there's a big, retrenchment of asset valuation, people all of a sudden have a tendency to want to go to tangible assets. And real estate is one of the top tangible assets. And yeah, I personally still feel it's not at a bottom, but if we have a big market correction, I think there's going to be a lot of upside for real estate.
Yeah, and you said something interesting about the AI piece, and just we bought a 1.3 gigawatt power plant in West Virginia that we're majority owners of. And what's happened over the last several years with the demand for AI and data centers. So right now we're in the midst of I'm working on probably the largest transaction I've ever worked on in my life, possibly, which is taking the power plant, converting it to natural gas, partnering up with the data centers and these hyperscalers, and there's a lot of money in that space. It's very complex, lots of moving parts, but the demand for power is not going away. It's not going away. And we don't have enough power. So we need to solve that problem in this country and around the world. But I'm focused on our country right now.
Yeah, and you actually segued into my next question, and again, complete alignment there. But my next question was, what's more on a longer term horizon look like for you? And the data space, personally, yeah, I think that's going to be just an amazing play. Kind of my sights on investing now, but the return on that, I believe, is going to be like 2000, late 20s, 2030, 31, 32, because to your point, there's going to be so much demand for the data and the energy, and we simply don't have enough. And the path we're going down, it, the path we're going down is not responding quick enough to what the demands are going to be, in my opinion.
No, Tony and I had a meeting with Energy Secretary Chris Wright in Washington, D.C., approximately a little bit more than a year ago. And they were just talking about they're looking at all sources of energy. We're in a bind right now. We need to solve this. And the blackouts that are already happening in places in California, multiple blackouts throughout the year. So it's a real problem. And we see those companies that can own, if you can, as an investor, own companies or own assets that are capable of generating power. I think that's a smart place to be. And another area where I think people kind of think about it, they're not talking about it that much right now, is humanoid robotics. This is just, and I think it's going to be coming quicker and faster than anyone's even expecting right now. There's a company called Figure AI. Brett Adcock has become a friend of ours, and we went and visited his plant in San Jose, and he has more humanoid robots working in his office, in his warehouse, than humans. And the orders that they're getting from giant companies like UPS to, order giant orders. And these robots, what they're doing, what they can do with their hands, the attention to detail of how the fingers move and how it picks things up, and how very specifically he's got the right height, 5'6", to be able to do everything that humans can do. But what he's doing is he's creating these robots where many of them can do what humans do, quicker, faster, and they don't stop. I don't know what the timing is. Maybe every 4 hours.
24/7 on this.
Exactly.
Yeah.
They'll go get charged, or they'll walk themselves to the wall and get charged, and then they'll walk back, take the next shift. So it's just, and I do believe that at one point there'll be more human and robots in the world than humans. And especially, it's not a matter of big dollars to buy these things. You can lease these for $200, $300, $400, $500 a month. And we all know people that are driving cars spending a lot more than that. If they can afford it or not afford it, they're spending that monthly car payment. So I just feel that robots are going to be coming in a meaningful way, and it'll be very disruptive, very disruptive.
Yeah, I don't disagree. All right, when we close out, AJ, on a handful of questions here. First one is, aside from what we've gone through, is there anything else on the horizon for you? Is there another chapter, or are you kind of embedded in your current chapter and going to continue going down that path for a little while?
No, Tom, I love what I'm doing right now, but I do realize that, I spent 30 years in the business. I had access to all those financial titans, and I want to share it with more people, but I don't have time to share it with one person at a time. I love it when I speak at Tony's events and I get to share it with thousands at a time. But I do plan on, putting together just an educational content and just share it with any investor. It doesn't matter if they're worth $10 or if they're worth 10 billion. And there's a lot of wisdom out there that I just want to put in one location and make it timeless. It's not, hey, you should invest in this today. It's more like timeless principles that they could use that same wisdom 10, 20, 30 years from now. So I'm looking forward to, putting something out there in the next year or so.
Awesome. So is that already in the works, or is it all in your mind at this point?
No, I've been thinking about it for a while. And
Okay.
once we get this transaction done with the power plant, I'm going to spend more time on it. But the whole plan is I've already got I've got the 30 lessons that I would love for every investor to know and understand. I just have to put it together, get the videographer, and, go on social media, which I don't do much of right now, but go out there and put myself out there. It'll be a new
Yeah.
area. My teenage children think it's a great idea. And my wife thinks it's a great idea, and I love teaching. I just got to put myself out there, and I'm ready
Yeah.
to do that now.
Well, good. Well, when you do that, I'd love to have you back on. Let's discuss that a little bit in
I
more
would love that.
detail. Awesome. So if the 25-year-old version of you asked you for one piece of advice, what would it be?
I'd say write down your goals and think big and go for it. Just go for it. Live with no regrets. Just whatever the goal or dream is, write it down, come up with an action plan, and go for it. That's what I tell my kids. That's what I tell anyone that asks me something like that.
Love that.
And
Along
actually,
the
if I
same
could just
lines.
add one thing,
Good.
I'd also
Yeah, yeah.
say sleep a little more. Sleep 10% more and eat 10% less. That's probably not that I tell a lot of my friends.
Well, I use the Aura, I use the Whoop, and it's completely changed my sleep habits. Still trying to get better. I'll get a I tend to stay up late, relatively late, 11, 12 o'clock. And there's days where I'm getting a notice at 8 o'clock at night. Hey, you need to start winding down and go to bed.
Yeah, this is fantastic.
But
It's amazing.
But the bottom line is it makes you a lot more conscious, not only of your decisions, but of how your decisions impact you
Yeah.
from a health standpoint.
You have your dashboard, and now you see the numbers, and then you gamify because you want to get better at it. So I think, and the technology is only going to get better. So I can so relate with you, and especially in regards to sleep. We just have to have the proper rest.
Yeah, for sure. So aside from a book that you've been involved with, what is the one book that you'd recommend to somebody?
Oh my
Or
goodness.
even that maybe changed how you think about
You know what? Believe it or not.
yourself and what you've done.
So this book first came out 35 years ago, and Tony just sent me a copy because they just did the 35th anniversary edition. Awaken the Giant Within. It's amazing. It's absolutely amazing. It has so many nuggets that I learned in my 20s. And I tell everyone, depending on how you consume things, buy the book, get the Audible, whatever the case is. But I think it has so many amazing life lessons in there that anyone and everyone will walk away with some really good content that's applicable to them. If I read that, Tony just sent it recently, but if I read that book again today, which has been a very long time since I first read it, there'll be so many other things that'll talk to me today as a 55-year-old versus a 25-year-old. So I'm looking forward to digging into it, but I'm actually going to do it through Audible. That's just the way I consume.
That's how it is now. Yeah.
That's the way it is, but it's nice to have the book behind me.
Well, I made a note as well, and I've never read it, so I will check that out as well. I listen to a lot of books. It means a lot to me.
Yeah.
Well, AJ, my closing question, the podcast is called The Significance of Wealth, and I'd love to know what that means to you at this stage of your life.
The significance of wealth to me means freedom and time to do what you want to do with who you want to do it with. And including me, I need to remind myself that sometimes because I still catch myself getting excited about the next shiny object. But it just gives me the freedom to travel with my family and loved ones and do things that I want to do when I want to do it. So I think that's the main piece. When I was building the business, you didn't have it all. Like I used to say, rarely do I find people that have three things at the same time: health, wealth, and time. When you see someone that has got all three at the same time, I remind them and I tell them, do you realize that you've got health, wealth, and time to do whatever you want? And because most of the time people are missing one or two, unfortunately, of those three. So for me, just creating unbelievable life experiences with my loved ones. That's what it means to me.
Yeah, that's fantastic. Well, listen, brother, thank you again for being on here. Love talking with you. Love the energy you bring. Just love your overall thought process. So look forward to having you back on when you get that book done. And hopefully look forward to connecting again in person, whether when I'm down in Miami or Tiger. I don't know if you're going to the Global Summit this coming year, but definitely would love to connect again.
Good. I'm looking forward to it, Tom.
All right. Thanks again, AJ.
That brings us to the end of today's episode. Thank you for tuning in. Be sure to subscribe to Significance of Wealth on Apple Podcasts, Spotify, and anywhere else you get your podcasts so you never miss an episode. You can also follow Tom Ruggie and Destiny Family Office on LinkedIn and destinyfamilyoffice.com for more insights on wealth management, private market opportunities, and collectibles. Until next time. The expressed views, thoughts, and opinions belong solely to the host and/or guests and are not investment recommendations or opinions issued by Destiny Family Office or its affiliates. Investment advisory services are offered through Destiny Family Office, LLC, an SEC-registered investment advisor. Destiny Family Office podcasts are the sole property of Destiny Family Office, and information provided is for informational and educational purposes only. Learn more at destinyfamilyoffice.com/disclosures. The funds discussed are typically for qualified purchasers, defined as $5 million of investment net worth, exclusive of primary residence.